Hi, let's have a look at Elrond with the EGLD token, ticker symbol EGLD, currently at $227.46. It's the 40th largest cryptocurrency, currently with a market cap of $4.5 billion, and it's got quite a few competitors. There's quite a few projects that try to increase efficiency in the smart contract market. So as we all know, the market leader, Ethereum, has very high gas fees. If you swap an ERC20 token on a DEX, you easily pay $50 US. If you buy an NFT, you easily pay $100. It's almost impossible to use DeFi if the reward, the annual percentage yield, isn't very high, or if the sum invested isn't very high. So unless ETH 2.0 doesn't change this massively, it gives a lot of room for competitors such as Elrond. But Elrond is not alone, right? We've got Cardano, we've got Phantom, we've got Avalanche, Solana, Polkadot, and Harmony. They all try to achieve more or less the same thing with different approaches. What we will do in this video, for this Elrond specific video, is we will look at relative price performance. So we will not dive too much into the fundamentals, but instead we will look at Elrond charts that you've probably not seen before. This here is the long-term US dollar chart. You have seen that. It's on a logarithmic scale. So at the top here, one interval is $60 US. At the bottom here, it's less than $2. So logarithmic scales are useful to get a feeling of how are price movements in relative terms. So say when you compare this distance over here, you've got 300%. When you compare this distance over here, you also get 300%. So this is what logarithmic charts are good for, to get a feeling of how much percentage return can you make when investing at a certain point in time. If you look at the absolute chart, this is very different, right? This is now where the price differences are constant and where you can barely see the price action in the early days, so that's why we look at logarithmic charts. But what we are actually interested in is not the US dollar performance, because cryptocurrencies, they are very highly correlated to one another. If crypto goes up, a lot of altcoins go up. So this is the Elrond chart. Let's look, for example, at the Ethereum chart. It doesn't look that different, right? The bottom here is pretty much at a similar time to where we have here a bottom in Elrond. This is Solana, also looks pretty similar. Polkadot, they all rally more or less at the same time. They all have a bottom more or less at the same time. And so what you're really interested in when buying an altcoin such as Elrond, the EGLD token, which has a market dominance of 0.2%, what you're really interested in is outperformance, because you're taking on much more risk with a small altcoin compared to, say, buying Ethereum that has a market dominance of 18%. So Elrond is around 1/100th of the size of Ethereum. It's way, way smaller. And so this additional risk, it should be compensated, right? Over the long term, you should expect more performance. You take on more risk because it doesn't make sense to take on more risk and not getting rewarded for it. So what we're going to do is we will look at the Elrond chart, at the Elrond price, and we divide the Elrond price by its competitor prices. So this is now the Elrond price divided by the Ethereum price to give us relative performance. How did Elrond over the long term perform relatively to Ethereum? And we do the same for Cardano, for Polkadot. So this is Elrond divided by Polkadot, Elrond in Solana tokens, Elrond versus Phantom, versus Avalanche, and versus Harmony. Now my impression is that Elrond is still relatively early in its process. There is an exchange in development, the Maya exchange, a decentralized exchange built on Elrond. But we are still pretty early here, right? When we just look at analytics, governance, it's coming soon. It's not as accessible as, say, a spooky swap on Phantom, where you already have a bridge, where you can directly swap your tokens. Or say for Solana, the Radium DEX, which you can also already actively use. So Elrond is earlier in the process. We can also see this by the circulating supply statistics. So there's still 1/3 of tokens to be issued, which is important to note, right? Because this will be additional supply at some point. This will depress the price. So the project's development and the demand that comes from that needs to offset this additional supply. If you compare this, for example, to Cardano, the circulating supply is higher. So the price pressure, the downward price pressure that comes from additional tokens will be lower over the long term. Here we've got Phantom, where we also have 80% already circulating. So less pressure here. But Elrond also is not the worst, right? Avalanche has still a long way to go, a lot of additional supply that can enter the market. And then there are successful coins that don't have any supply cap, right? Not every successful cryptocurrency needs to have a supply cap. Bitcoin does have one famously, right? The 21 million. But Ethereum, for example, does not. Ethereum mining creates new tokens. Using Ethereum burns tokens, at least to a certain degree. And so there are crypto projects where supply can increase. The same goes for Solana, for example, no maximum supply. Same for DOT and for Harmony. Now, when investing in Elrond, you need to be aware that it's comparatively more risky. We are looking at market rank 40. Its competitors, most of them tend to have a higher market cap and a higher market rank. Cardano is obviously in the top 10. It's at number 4. Phantom is larger, rank 33. AVAX is also larger, market rank 16. Solana is at number 7. Polkadot at number 8. And the only competitor that's below in terms of market cap is Harmony at place 57. But Harmony is at a similar stage to Elrond, still a lot of execution to be done. You're betting here for Harmony and for Elrond on future execution. If you're investing based on fundamentals, you should be looking at the teams here, not so much at what has already been built. The teams will eventually build these things, so it's almost like seed funding. It's putting money in before a lot of revenue has yet been made. This is very different to Ethereum, right? Where you've got decentralized exchanges, NFTs, DeFi, all of those ecosystems being very large and turning over a lot of revenue. So for Ethereum, you're betting on the current ecosystem. For Elrond, you're really betting on the future. Now, Elrond is not alone with that. We also have this, for example, for Polkadot. This is the relative performance of Elrond to Polkadot. So we see a long-term outperformance here of 78%, more or less consistently. Here is the Elrond performance versus Harmony 1, also outperforming 117%. And here we've got the valuation versus Cardano, so the Elrond price versus Cardano. An underperformance over the long term, so this is 1.5 years. Which is not surprising, right? The Cardano ecosystem is pretty strong, a very strong community, and so it's hard to keep up. What's interesting though is the relative performance to other smart contract platforms that already have a product, that already have a lot of active users. So this is now the relative performance to Solana. Solana is outperforming, or in other words, Elrond is underperforming by 71%. Here's the relative performance to Phantom, also an underperformance of 78%. And the only active project that Elrond is outperforming is Avalanche. And that's very likely due to the lockup periods of Avalanche, due to the issue with the circulating supply. People that follow the AVAX project say this will slow down, that the additional supply pressure here for Avalanche will reduce. I don't know enough about AVAX to make a judgment call on this, but what I do think is worth noting is projects that launch that have something that can be used actively, they tend to outperform projects that are still in development. So when the risk is off the table, when the user adoption is coming in, that's when the performance happens. Now the relative chart to Ethereum is also worth noting. This is the Elrond price divided by the Ethereum price. And it seems to be that the two assets, they are in a long-term trading range, currently with EGLD being comparatively high. Now what I find interesting about this chart is that we don't have these typical trading volume patterns. Very often what we see in crypto is a connection between trading volume, or in other words, attention, and price increases. So this is now Dogecoin. When attention goes up, when trading volume goes up, that's also when the price goes up. When trading volume goes down, the price tends to decline. So the price is directly linked with trading activity, with attention on the token. That's what we see very often in crypto. Now that's not the case for Elrond. These price increases here did not happen when trading volume was particularly high. So the price drivers here are not just attention driven. Elrond really seems to do a thing of its own. It looks like it has very low correlation with Ethereum, for example. What we can see in many altcoins is that they rallied since the beginning of the year, because that's when Bitcoin dominance was at its highest. It was at 72%, and then Bitcoin dominance went down, which means, in other words, that the altcoins, they gained ground. A lot of altcoins, they made money since the beginning of the year. And in the US dollar chart, this looks similar for Elrond. Since the beginning of the year, it's going up quite a bit by 850%. But if you look at the relative performance to Ethereum, it's not that clear, right? You would expect that an altcoin that is way riskier than Ethereum to even outperform Ethereum when times are good, right? When there's an altcoin rally, when Bitcoin dominance is going down, then the more risky the altcoin, the more money it should make. And so what you would expect is that from the beginning of the year, the price of Elrond should more or less steadily outperform Ethereum. But it doesn't. It's kind of like in a sideways trading range. And that's very interesting. That's not very typical. And so the way I see this is there's two approaches to this now. If you believe in Elrond fundamentally speaking, you want to hold the EGLD token over the very long term. And you think that the projects, they will take off, they will get adoption. And in the end, relative charts such as EGLD to Phantom will turn around due to EGLD getting adoption. If that's your investment thesis, where you can easily make like 500% or so relative to its competitors, if that's your long-term thesis, then probably the best way to approach this is to simply dollar cost average. To buy regularly and buy for a fixed certain amount every month or so. And so you automatically buy more when the price goes down. You buy a bit less when the price is very high. You dollar cost average in. And so no matter where the price is going, when it's going down, you can tell yourself a good story. I now get more tokens for my money in this month. When the price goes up, you can also tell yourself a good story because you effectively made money. So you're becoming more agnostic to the short-term price fluctuations and you're really betting on the long term. You're really betting on this Elrond ecosystem. One way to fine-tune dollar cost averaging is to look at the US dollar chart and take the hourly ticks here in TradingView and then use an indicator called the RSI. That's this one over here. And then you just look at the past. Where has the RSI historically been relatively low? So that's for EGLD around 26. And so you'll always buy when the RSI reaches this level. And so on average, you get better than random prices. This is better than simply buying on the first of every month. You're really getting entry points here that are comparatively lower than average. And so it makes sense to simply use that approach when you plan on buying into EGLD several times. Now, if your approach to Elrond is not long-term, but you simply want to trade this, what are approaches to time the market? One way, of course, is to look again at the relative chart to Ethereum because we want to get outperformance. And then we can try to find the perfect moving average that tries to distill the up movements from the down movements. So the idea is you buy whenever the price is above the moving average, you sell whenever the price is below the moving average. And so you're in the market when prices tend to increase, you're outside of the market when prices tend to decline. But what's important here is that you don't get a lot of random noise. You don't get a lot of buying and selling signals that then incur a lot of trading costs that destroy your overall performance. So you need to get an optimized moving average. And so let's just do that. Let's increase the moving average duration. And the 85-day moving average seems to be working relatively well for this EGLD to Ethereum chart, which would imply that we are still relatively bullish, but we don't have a lot of buffer, right? I personally find these trades a bit too risky to buy on short-term negative momentum and to hope for a support, but that's really based on your individual risk tolerance. One trade I would feel more comfortable with is again using the RSI, but this time on the daily chart, and to buy when things are really, really depressed. And that's on the daily chart at around 24. Note though, these points are not perfect either, right? If you buy here, you would have gotten still another 30% drop. If you would have bought here, very similar story, another 27% drop. But I'd feel more comfortable buying in this region here than simply hoping for a rebound because it might not happen. It can happen, but it can also go wrong. So if you're looking for a short-term trade, this could be a buy, but set your stop loss, a stop loss with around a 5% underperformance or so. So very tight, because if this support does not hold, then we could easily drop down to this RSI level again, and then maybe fall another 20% or so. So we could probably see another 40% or so underperformance if we are not bouncing from here. So those are ideas you can play with if you're looking for a short-term trade. If you like the knowledge in that video, feel free to give this a thumbs up. YouTube will then help to grow the channel. If you haven't yet, feel free to subscribe as well. I publish videos regularly. You might as well hit notifications. Since these videos, they are time sensitive. And last but not least, feel free to join our Telegram channel. We are more than 800 people over there. The Bitcoin Strategy channel. You can find us either by clicking the link in the video description or simply by searching for Bitcoin Strategy channel within the Telegram app. See you next time. Bye bye.